Nigeria's apex bank governor has said that the central bank is comfortable with the operations of the Nigerian Bank and the regulator is prepared to fight any major shock that could hit the country's financial system. The MPC yesterday maintaining a neutral policy stance, leaving the MPR unchanged at 12%. We caught up with the central bank governor Sanusi Lamido Sanusi to hear more about the apex bank's plans for the financial space going forward.
First of all, exchange rate stability has always been important to us, and it's critical to our price stability mandate and to financial system stability. We have always been aware of the implications of having a capital market that's driven by portfolio flows, and lots of the money that's coming to Nigeria in the last year and a half has actually been portfolio. I think about 80% or more, almost 90 of what's coming has actually been portfolio, and a significant part of that has been into the equities market. So the first thing to note is that first of all we have stopped the banks or placed limits on how much they lend as margin loans. We've broken up universal banks and stopped the banks from proprietary trading, so the banks and deposits have been ring-fenced from any crash in the capital market. The second thing is we've got central bank reserves today of about 37.5 billion. Out of the 49 billion that we have in the books, about 37 billion belong to the central bank. So we have enough ammunition anyway to pay investors if they want to take their money out. But the global conditions, the oil price, the quantitative easing around the world, the stability in our own financial markets are such that we do not see a risk of a sudden flight unless you have a major shock, and we're prepared for that shock, but we don't expect one at this moment. The risk obviously remains in the medium to long term. You cannot build an economy based on short-term inflows. But the reason you're not having long-term flows is because the reforms on the structural side are not happening. And the point we try to make is it's important for us to fast-track the power reforms, for us to fast-track the reforms of the petroleum sector, the reforms of agriculture, so that we attract long-term investments.
The MPC can be described as a bi-monthly state of the economy speech. What's your view of the economy right now? It seems we are in a good place in terms of growth. Oil prices are above $100. What's the key risk for the economy that could generate instability?
Well, I think first of all, the oil sector has been contracting for recent. We've got major issues of production. Production is far below what is indicated in the budget, and that's a source of concern. So while oil price may be high, we're not taking full advantage of the high oil prices because of the supply problems, and also the delay in the PIB means that we continue to spend a lot of what we earn in foreign exchange importing petroleum products. We've removed fuel subsidy since last year. We've not yet built any refinery. And until we build refineries and reduce our dependence on imported petroleum products, we're not going to basically extract the full benefit of removal of these subsidies. The second thing is agriculture. The transformation is going on apace. However, as you can see, agricultural GDP growth has continued to slow down. Now, my sense is that we are in a classic Malthusian situation where we are reaching the limits to how much we can increase agricultural productivity by bringing more factors under production. So we can't continue growing agriculture through factory intensity. We've got to focus on infrastructure, on training, on inputs, on technology. Focus on improving productivity per hectare rather than bringing more and more hectares under cultivation. I think we're reaching the limits of growth using that, whether it's because of the social violence in the north that has led to relocation. It's all part of it's a Malthusian consequence of overpopulation. So there are concerns, obviously. We need to continue with those reforms.
there is a sense that foreign investors have become very comfortable with your leadership as central bank governor and will prefer you to stay as the central bank governor. Will you consider staying as a central bank governor when your current tenure ends next year?
I do not have any intention of offering my services for a second term. It's been a very clear statement. I think anybody who knows me knows that I have never planned to stay for 2 terms. I believe that I came in to do a job. That job was to fix the banks and restore stability. I believe that job is substantially done. There are 1 or 2 boxes left to fill. One of them is the AMCON legislation to ensure that the banks actually live by their commitment to fund AMCON so that we don't leave this country with a fiscal risk, because AMCON is a fiscal risk until you get a legal basis for payment of that risk. The other is to actually shepherd the process where AMCON begins to exit the 3 banks that it's in. In terms of exchange rates, we're fine. Reserves are at about $50 billion, and they will cross $50 billion very shortly. The banking system is stable. Inflation is now low and stable. We're in single digits. We don't think we're going to see inflation in double digits this year. Maybe 10, a little above 10, but not the kind of 12, 13%. So in terms of meeting the targets and doing the job, it's more or less done. And if the job is done, you move on.